OpenAI just hit 1 billion monthly users, the fastest product in human history to reach that number, and Google's stock hit an all-time high the same week. Here's what that actually means. OpenAI is burning $14 billion this year, not profit, loss. It collects $13 billion in revenue and spends $22 billion to earn it. That is not a business winning a war. That is a company that cannot afford to keep running its own product. Meanwhile, Google invested $185 billion in AI infrastructure in 2026, funded entirely from operating cash flow. Not a funding round, not venture debt, profit, reinvested, and Gemini tripled its market share in 12 months. The real question isn't who has the most users. It's who can afford to still be here in 3 years, and by the end of this video, you'll see exactly why the company that appears to be losing is the one that's already won. Think about the last time you searched for something and Google gave you an AI summary instead of a list of links. You didn't click through. The answer was already there. That was Google quietly cannibalizing its own business model, on purpose. ChatGPT processes 2.5 billion queries a day, but 93.7% of those are informational. People research on ChatGPT. They buy on Google. OpenAI is the research assistant. Google is still the checkout counter. OpenAI's enterprise AI market share dropped from 50% in 2023 to 27% in 2025. In the same period, Anthropic went from almost nothing to 40% of enterprise spend. OpenAI built the category. Then it watched 2 other companies take the professional market. So the real question is, which company has the financial structure to survive the next 5 years of AI investment? And to answer that, we need to go to the numbers. Not the press releases, the actual numbers. OpenAI is projected to post losses exceeding $14 billion in 2026. The company collects roughly $13 billion in revenue and spends $22 billion to generate it, burning approximately $1.69 for every dollar it earns. Internal projections show cumulative losses of $44 billion between 2023 and 2028, with profitability not arriving until 2029 at the earliest. Now here is the number that changes everything. Alphabet crossed $400 billion in annual revenue in 2025. It reduced Gemini's serving costs by 78% in a single year. And it invested $185 billion in AI infrastructure in 2026, funded entirely from operating profit. Not investors, not debt, from the advertising engine that still controls 89.87% of global search. That asymmetry, not benchmark scores, not model quality, is what this war is actually about. OpenAI needs investors to survive. Google funds AI development from profits. One company holds a collection tin, the other holds a river. ChatGPT hit 1 billion monthly users. Only 5.5% of those users pay. That means OpenAI is serving 945 million people essentially for free, at a cost it cannot cover from current revenue. Meanwhile, Gemini reaches 2 billion users monthly through Google Search, users who are already inside a monetized advertising ecosystem. Google reaches twice as many AI users as ChatGPT, earns advertising revenue from every one of them, and pays for it from its own profits. 93.7% of ChatGPT searches are informational versus only 0.1% transactional. Users research on ChatGPT, then they buy on Google. OpenAI has built the world's most popular research assistant, and it cannot monetize the transaction that research leads to. The enterprise AI market is the real war. OpenAI's share fell from 50% in 2023 to 27% in 2025. Anthropic rose to 40%, Google 21%. Combined, the two companies that are not OpenAI now control 61% of enterprise AI spend. OpenAI built the category and lost the category to a startup it is older than. Insight 1. The self-funding flywheel. Whoever can fund AI from profit will always outlast whoever funds it from capital. Google invests $185 billion from profit. OpenAI has raised $57 billion from investors and still projects losses through 2028. The technology gap is closing. The funding gap is not. In a sustained war, the company that doesn't need to ask for money wins. Insight 2. The attention trap. The most used product is not always the most valuable product. OpenAI is subsidizing 945 million users with investor capital. Scale without monetization is a cost, not an asset. Google reaches more AI users through Gemini and AI overviews than ChatGPT and earns advertising revenue from everyone. Insight 3. The category founder problem. Building a category does not guarantee owning it. OpenAI invented modern consumer AI. 2 years later, it is losing enterprise share to Anthropic, a company it is older than. The company that establishes a market creates the demand that competitors fill. OpenAI created the demand for enterprise AI. Anthropic filled it. The verdict. OpenAI built the category. Google is buying the category. Anthropic is winning the category, quietly. And the company that will own AI in 2028 is not the one with the most users. It's the one that figured out how to pay for the infrastructure without asking someone else for the money. Subscribe, because next week we run the same forensic analysis on Netflix versus Disney. The numbers are more alarming than anything you'll read in a press release, and the winner is not who you think.